Hey, welcome to the podcast. Today I'm going to give you advice to the young people, right? If you're 18 or you're just graduating, listen up. And also, this works for everybody else too. So stay tuned, listen up, and welcome to the Rodney O Podcast. Okay, I can remember back when I was 18 and just graduated from high school. I couldn't wait to move. I couldn't wait to be out on my own. And I remember the very first day I had the opportunity to move, I did. And I wasn't going too far. I was probably going about 50 miles away because I was going to college. And I was able to move into an apartment with my brother. He was already in the apartment about half a year before me because we were both going to the same college. And so my father was paying the rent. And I remember just being so excited about being on my own. I had a job. I didn't have to worry about rent. Now, everything else I had to worry about, utilities and food. But rent was a big deal that I didn't have to worry about. And I remember back then, just as far as my spending habits, I made money and I spent it. I made money to spend it. My God, man, car. So I had a car payment because I went out and got a nice Acura. I would get stereo systems and they ended up getting stolen. So I get another one and get stolen. I can, repeat over and over again. Food, just going out, just not cooking. Who has time for that, right? And so, that continued, and eventually had to pay my own rent. Eventually got a house around 22, 23 years old. And I was happy about that. But, I started out with a single family house, single family residence. And it was my first asset or liability, whatever you want to call it, however you want to define that. Some people put it in the asset category, some people put it in the liability category. But the bottom line is from 18 to 22 or 23, I didn't make much headway. Now, I was able to buy a home at 22, 23, but I could have done this much, much differently, especially since my father was paying the rent. And so that's what we're going to talk about today on the Rodney O Podcast as we continue the finance series is, hey, I'm 18. What's the plan? Welcome to the Rodney O Podcast. Today on the Rodney O Podcast, we're going to continue our finance series, and today we're going to dive into helping out people who are young, the young people, what they should do in order to go ahead and get started in real estate. And, it's going to be beneficial for people of any age, but especially those of you who are 18, who are just graduating. This is really for you, so stay dialed in and listen up. Because some of you guys know that this channel, the Rodney O Podcast, focuses on the 3 F's, faith, finance, and fitness. So be sure to check out my other series on this channel, my faith series titled Survival Guide to 2021, John's Instruction Manual, my fitness series with my good friend Charles Furman titled Faith and Fitness with Furman. But just to give you a little background about my credibility into real estate is I've been a licensed real estate agent in California since 1998. Licensed broker since 2006 and worked in several different markets, helping clients buy and sell their homes. Worked with several investors over the years, and so last year I decided to take that leap and become one myself. Waited too long, sadly to say, but this is why I want to help other people, and especially today as we talk to the younger people. And there's a lot of people out there who are ready to get into real estate and they want to invest. And, eventually I'm going to do topics, I keep saying this, but trust me, it's coming, where I do topics on stocks and Forex. But, I've found that the more people I talk to, especially when they're younger, that's what they want to get into, right? They immediately go to stocks and Forex, I think because it is a very easy entry point. They understand it a little better than they do real estate. Real estate is maybe hard to understand, a lot of contracts, a big purchase price, it can become scary. And where stocks, they kind of understand, you put money, you find an online broker, very easy to get into and easily to start investing in that. Even though, in my opinion, you want to stay in there for long term, and younger people get trapped into short term and can lose big. But now, why not real estate then? Well, they're paralyzed by fear. They have excuses. But today, again, let me speak to the 18-year-olds who are just graduated or are about to graduate, or maybe you've you're young, maybe you're not 18, but you graduated 2 years ago, 1 year ago, whatever it may be, still tune in. And then lastly, for those of you who are maybe more seasoned in life, they can get an insight as well. You can get something from this. And the plan I'm going to outline, actually works for any stage in life, but I think it's really beneficial to those who are young. And so let me give you a couple steps to take. Okay, listen up. Take notes. First, whatever you plan, if you're 18, college, to work, whatever you do, save, save, save. And I'm not saying don't go to school. I'm not saying work only. I'm saying that whatever the plan is, whatever you plan to do, travel, have fun, kick back, whatever, save. Save your money. Don't get caught up into being fancy, right? And this is very hard to do when you're young, because it seems like everybody's getting theirs, getting their cars, getting their shoes, getting their new clothes, whatever it may be, getting their drip, right? It's hard when you're young. And to see, to be somebody who doesn't have any of those things, who is wearing just, regular clothes from wherever you could find them from, not getting fancy. It's very hard, but trust me, don't get caught up into that. It doesn't mean as much as you think it does. Don't get into student loan debt. It's a good one too. Do any other option, cheaper school, and that's the thing. Some people say, I want to go to this school, and they think it's, this is a highly prestigious school, but it's going to cost me, I want to move out of state. I want to do this, and it's going to cost a ton of money. Don't do that. Just going backwards. I'm going to teach you how to be 21, 22, 23 and have a net worth, not debt. Okay. You're going to have some debt because you're buying something, but it's going to be a good debt, not student loan debt. Right. So don't get fancy. Save up, don't get fancy with your school. Don't get fancy with your clothes, your shoes, whatever it may be. Right. And don't get embarrassed or try to impress anybody. Your time is coming. Trust me. And the years that you grind go by fast. 18 and 22 will go by so quickly. You won't even, you'll blink and it will go by fast, right? You already been through 4 years of high school, and that kind of went by fast. When you look back, trust me, this will go by fast. So don't get embarrassed or try to impress people at that age. Because if you can go somewhere where you can stay at your parents' house and save money, or go somewhere rent-free, do it. Just do it. And I know the temptation is I want to go and I want to fly on my own and be on my own, but you want to save as much as you can. Because this is not a get-rich-quick thing. This is a get-rich-eventually thing. So that's the first step. Whatever you plan, save. Next, after a couple of years of this building your nest egg, find an income-producing property. And notice I said an income-producing property. Don't go out and buy a single-family residence. Again, this is whatever you want to do, right? But I'm saying go out and find an income-producing property. And the good thing about this is, because people talk about different markets. Oh, it's not the right time. The market's this and that. It doesn't matter. Find something you can afford and rent out. That's all that matters. Because it's a long-term thing, right? And so a fourplex is best, one roof, 4 units. You live in one and rent out the other 3. Threeplexes work too, or a duplex work if you can't find a fourplex. It might be difficult to find one, but keep looking, keep digging. You have money and you can do this. And once you find a property, get an FHA loan. And the reason why I say that is because it's a low down payment, 3.5%. And there's other things you can throw in where you can even get lower than that with seller incentives and things. So it depends how you write the contract, right? I can probably, get somebody in, finagle, get them in for 0.5% or whatever. But you'll have what they call PI, premium insurance, mortgage premium insurance. Some people, PMI, PI is the same thing. FHA technically, I believe, is PI. But you're going to have insurance for your mortgage because of its low down payment. It's a price to pay. But follow me here. Because the goal is to acquire the property, to rent the doors, meaning like there's 4 doors, rent 3 of them, live in one. If there's 3 doors, rent 2 of them, live in one. If there's 2, rent 1, live in one, right? Because you're going to get that money to go towards your payments. And again, you'd be able to save more and more and more, and you have a place to stay. And I know some people, there might be fears, right? Like, I don't want to be a landlord. I'm going to live right there. They're going to knock on my door at midnight. Well, don't tell them you're the owner. Use a property management company. So there's separation there. Unless you want them to know and you want to manage the property yourself, that's definitely fine, because property management company is going to take their cut. But it's a good way to have that separation, right? You know, when you're all talking outside about this landlord that they hate or whatever, you can say like, yeah, me too. Or, you know, you can defend yourself without them knowing you're defending yourself, right? Some other fears is like, hey, I have no experience. Well, you learn as you go. I mean, this is your experience. You're learning. And that's the best way to do it, to just jump in the fire. You know, don't be scared. I mean, you're building wealth right now when you do this. So you want to go in and you want to get that fourplex. Live in one, rent the other 3 out. Probably with the rent the other 3, you're going to probably break even, so it doesn't cost you a thing in living. You're going to live there for free, or it costs you very minimal, right? Again, work the numbers. You know, don't get caught up into, it's too much or too less, whatever. The numbers dictate the deal. I always say that the numbers dictate the deal, no matter what kind of market you're in, sellers, buyers market, or whatever. And plus, this is income producing property. It's a little different. So you want to do those first 2 steps. Then the third step, what you want to do is you want to refinance down the road to get out of the FHA loan. And hopefully you can get rid of that mortgage insurance, the MI. I said PI earlier, it's MI, mortgage insurance. So you want to get rid of that because that's going to be an extra fee every month you're paying. But when you refinance out of the FHA into a conventional loan, what they call a conventional loan. And that way you can pay off the FHA and you have options at that point. So suppose you buy it and you live in it for 2 years, you're ready to refinance, you've had equity because you've been paying on the property. So that's equity right there automatically. And the market appreciates. So the property's worth more. Maybe you were able to raise rents in 2 years. So again, with that rent being, it's an income producing property, you know, increased rents increases the property value, right? Maybe person moved out, you fixed up a little bit. Maybe you bought something that's a little bit of a fixer and you were able to fix it up. And that's how you charge more rent. And so the property value increases. So you have choices now when you get ready to refinance, because you can refinance and cash out. Meaning if you have a $100,000 loan on the property after making payments and things, and the property's worth $200,000, and you can get an 80% conventional, you can go up to $160,000. Now you don't have to take the full 60. You can if you want to, depends on your payment, but you can take that out and you can rent out that 4th unit finally. And you can go get another place. You can get another investment property. But all of a sudden you have an asset. You have this property now and you have income coming out, right? And the options are plentiful at this point. And by this point, if you do this, you know, follow the timeline here. 18, graduate, save money for 2 years. You're 20, you buy your first fourplex. At 23, 3 years of it, you refinance. Now at 23, you pull out 60 grand. You have 60 grand to buy another investment property, buy your own property. Maybe you're getting married, whatever it is. Don't use the 60 grand and just blow it on anything that's not going to last, and reinvest that money either in your own property or another income producing property. So suppose, you know, you're 23, you pull out 60 grand out of the place, refinance, you rent that 4th unit out. Your cash flowing, let's say, because you have a higher payment now, but the fourplex you rented your unit out that you're going to move out of. Suppose you're just cash flowing. Let's say this be modest, $500 a month, right? A big deal, Rodney, right? But you have 60 grand. You have a property that's people are paying on for you. You have $500 a month coming out, and you have options to buy another unit. Maybe you take that 60 grand and you buy a second unit. That's going to cash flow you $1,000 a month. Now you got $1,500 a month in two buildings with units, right? And then from there, it's easier to grow and grow and grow. And that's how you gain wealth and you get properties. Maybe you don't pull 60 grand out. Maybe you just pull 20. That's all you need for next property. It's 20 grand, right? And now you have even more equity. So you wait 2 years down the road some more, and all of a sudden this property is worth $300,000 now, and you can pull 80% out. So you can pull $240,000 now, and you only owe $80,000 on the property, right? And now, what is that? $160,000 you can pull out. So suppose you do pull out $160,000 at that point, and then you go and buy another property. I mean, the possibilities are endless. Suppose you just work to pay that first property off. Like you say, you're like, you know what? I don't want to pull money out of that property. I want to keep, having the balance go down and down. And now it's cash flowing to me because of appreciation, increased rents. It's cash flowing me $2,000 a month, right? $2,000 a month versus owning a property. So this is what I'm trying to teach, right? Is it works when you're 18 because you have the least amount of responsibilities you can save. You'll be able to save and keep expenses low. If I can go back to 18, have my dad pay rent, and have this regular, ordinary car with no car payment that got me to and from work, had fun with friends on the weekends or whatever, and I was just saving money, and then instead of buying my first house, I bought my first fourplex. And I mean, I would be sitting pretty right now, right? So that's what it's all about. Because by the time you're 24 and you follow this plan, you have property, you have net worth. But the hardest thing about this, right, and I understand it, is going to be patience. Because at that age, you want to enjoy life and so many things. You often think you need to spend money to enjoy yourself. So avoid that temptation. It's hard, but avoid that temptation, right? But if you want to formulate a plan, or if you're ready to start and need a mentor, DM me, and I can get you started. It's kind of the first of the 3 steps I had in my last podcast titled The 3 Steps to Start in Real Estate Investing. The first one's get a mentor, advice, guidance, and it may cost you, but know who you're going and talk to. I always give the first call or 2 for free before I start charging. And I only charge if we're really dialed into a plan and you want some ongoing mentorship. Because the first deal is mainly about experience over money. And that's why I said this first property, this fourplex, don't worry about the price. Just worry about the numbers, how much you have to pay a month and how much rent can you collect and how much it's going to cost you to make that payment, right? And then put some money away for maintenance. So, that's the first step. Get a mentor. Next one's take action. And the third one's do the deal. So hope that helps you guys. Hope that helps you guys get into real estate investing and you guys want to jump in. It really does help set a path for you guys moving forward. And so I look forward to more and more of these conversations. I love talking about this stuff. I'm going to set another free Zoom call soon here. And this is, a recording you're listening to now, a couple of weeks down the road. Look for those free Zoom calls. My information is going to be in the podcast description. And if you decide to go and use a mentor, hit me up and I'll be glad to help you out. And so continue to spread and support this podcast. I really appreciate this, guys. We'll keep on plugging away and hopefully we'll go ahead and build some net worth for you. Especially if you're young, we'll get a plan for you and we'll get you going in your way. All right. Well, please feel free to dialogue with me. My YouTube channel, Rodney O, speaks highly of my life because I am in it and I'm showing you that I am living what I speak. So please be sure to subscribe to that channel. And the podcast description has a link into that, or you can go to YouTube and search Rodney O. Remember this, I want to inspire, encourage, and motivate all of you guys as you navigate this journey that we call life. Thanks for joining me, and I will see you guys in the next one.